Tokyo, Reuters, Asian shares fell sharply on Tuesday after Wall Street suffered its biggest decline since 2011 as investors saw euro trademark faith in factors underpinning a bull run in markets began to crumble. MISIA Euro Trademark's broadest index of Asia-Pacific shares outside Japan dropped 2.8% to one-month low, which would be its biggest fall in more than a year and a half, a day after it had fallen 1.6%. Japan Euro Trademark's Nikkei dropped 4.6%. Australian shares dropped 3.0% to their lowest level since October, while South Korean shares dropped 2.0%. All three broke below their 100-day moving average, a major support. U.S. stocks plunged in highly volatile trading on Monday, with the Dow Industrials falling nearly 1,600 points during the session, its biggest intraday decline in history, as investors grappled with rising bond yields and potentially higher inflation. A Euro Ezenki last autumn, investors had been betting on the Goldilocks economy, solid economic expansion, improving corporate earnings and stable inflation. But the tide seems to have changed, a Euro said Norihiro Fujito, senior investment strategist at Mitsubishi UFJ Morgan Stanley Securities. The benchmark S&P 500 fell 4.1% and the Dow 4.6%, suffering their biggest percentage drops since August 2011 as a long-awaited pullback from record highs deepened. The S&P 500 ended 7.8% down from its record high on January 26. Before Monday a Euro Trademark's fall, the index had not seen a pullback of over 5% for more than 400 sessions, which analysts say was the longest such streak in history. The trigger for the sell-off was a sharp rise in U.S. bond yields following Friday a Euro Trademark's data that showed U.S. wages increasing at the fastest pace since 2009, raising the alarm about higher inflation and with it potentially higher interest rates. The 10-year U.S. Treasuries yield rose to as high as 2.885% on Monday, its highest in 4 years and 47 basis points higher than the 2.411% seen at the end of 2017. It pulled back to 2.709% on a continued rout in equity markets. The CBOE Volatility Index, the closely followed a Euro fear index, a Euro measure of expected near-term stock market volatility, jumped 20 points to 30.71, its highest level since August 2015. A Euro for the last several months, whether a Euro Trademark's stocks or commodities, risk takers had been the winners. And Theta Euro Trademark's what hedge funds, which now manage $3.2 trillion, have been doing, a Euro Mitsubishi UFJ Euro Trademark's Fujito said. A Euro or Ether leveraged position is now being unwound. And it seems as though there are still some people who have a Euro Trademark T run away from the sell-off, yet. I would expect more instability, a Euro, he added. European shares also tumbled, with Germania Euro Trademark's DAX hitting a 4-month low. Yoshinori Shigemi, market strategist at JP Morgan Asset Management, said the specter of inflation will gradually undermine the attraction of equities even though the markets could rebound in the short term. A Euro or in the end, the Fed will have to hike rates. And if it doesn't, a Euro T, long-dated bonds will be sold off on worries about inflation. Either way, that is going to slow down the economy. Rising wages also mean corporate profit margins will be squeezed gradually down the road, a Euro, he said. Keen to avoid further risk, investors are closing their positions in other assets, including the currency market, where a popular strategy has been to sell the dollar against the euro and other currencies seen as benefiting from higher interest rates in the future. The euro eased to $1.2380, not far from last week a Euro Trademark's low of $1.2335, a break of which could usher in further correction after its rally to a 3-year high of $1.2538 by late last month. Against the yen, which is often used as a safe haven currency because of Japan Euro Trademark's solid current account surplus, the dollar slipped to 109.05 yen, having lost 1% on Monday. Bitcoin also tumbled, hitting a 12-week low of $6,600. That represented a 66% fall from its record high of $19,666, touched on December 17. It last stood at $6,986. Investors also dumped junk bonds, with the yield of Merrill Lynch U.S. High Yield Index rising to 6.017% from 5.964% at the end of last week. Still, it was far below its 2016 peak, just above 10%, when low oil prices hurt energy firms. Oil prices also dropped, with international benchmark Brent futures hitting a one-month low of $66.90 per barrel on Monday. It last stood at $67.02. U.S. crude futures traded at $63.56 per barrel, down 0.8% in Asia.